Hi, fellow traders. I hope you guys had a great day today. Man, it was a really nice day in the market. Nice gap up, some pretty decent price action after the open. Uh, and a lot of you guys took full advantage of it. We're gonna look at that here in a minute. Um, but we were talking about this yesterday. Let me bring this SPY chart up here. There we go. We were talking about this yesterday in the our Sunday morning market analysis session. We talk about swings and all of that too. We're talking about if this gapped up and held over the 20, we could see another bounce, but we needed to see it make a higher low, a higher high relative to the last bounce we had. But at the open, when the market opened about 8 o'clock, trading started on the SPY, it opened, it gapped up. It opened over that 20. And you can see I've got both. I've got the 20 EMA up here. I've got the 20 SMA up here. I like to use the EMA because the EMA actually responds quicker. You could see today that the SMA actually went down a few cents. The EMA actually went up a few cents. So it already started reacting to the price action for the day. And the SMA is still lagging. But you typically don't see this big of a gap between the two. It didn't start doing that. You can see it didn't start doing that until the volatility picked up on this big sell-off. So we still have a big divergence between the 20 SMA and the 20 EMA. But the good thing is it gapped over both. We are holding over the high of the previous bounce. So we're looking good for a continued move up. Now, how far it goes, you don't know. This thing could turn on a dime. We could wake up tomorrow and this could be gapped down if some bad news comes out. But right now, I can say it really looks good. And as long as it holds this and we can build off of this tomorrow, we might see some recovery, maybe 2 or 3 days, and could be able to catch some pretty decent swings in the process. So we'll be looking for that. So today, before we get into the little recap I've got to rant. And I've got to share this little lesson because, I saw something unacceptable in our community and centered around reflection and journaling. Being that it was a waste of time and, you didn't need to do that. That couldn't be further from the truth. And I really can't accept that in my community because that's one of the cornerstones of this roadmap to success. Everything that I'm sharing with you, this is a cornerstone. And so, I've got to say something. I had to just cut off the feed and walk away from the computer because I was getting hot. Not a whole lot of things bother me, but this is one of the things that will. So when you come into the world of trading, you're coming into a world and you're going up against some of the best and the brightest minds in the financial world, in the trading world. They've got years and years of experience over you. The one thing that you could do to help legitimately speed up your learning curve and bridge that gap is the implementation and the use of a trading journal as well as reflection, that reflection tool. A lot of very important traders do this. My mentor now that traded for well over 40 years, one of the first things he asked me is, do I have a trading journal? Do I reflect on each one of my trades? How do I do it? I had to go through the whole process with him. So I know it's very, very important. Whether you journal by hand, on the computer, audio recording, or through video, there's no right or wrong way to do it. It doesn't matter how you do it. You just need to do it. Reflecting and journaling are the two only ways that you're going to get better. Because just sitting in front of a screen, just getting screen time, doesn't really mean anything if you're not getting anything from it. And the only way to get anything from it is to reflect on what you're doing and journaling. As a matter of fact, my new book is based on using journaling and reflection as you go through the process. It's something that you've probably never seen before, and the only issue I'm having in getting it together is people putting it together the way I want to, having the page set up the way I want it set up. When you see it, you're gonna know why. But it's centered around it. That's just how important this is to your trading. One of the reasons most prospective traders fail is due to lack of experience and screen time. Yes, lack of funding and all of that, that's part of it. But one of the main issues is your lack of experience or screen time, your lack of time in the market. And what leads to this failure of new traders trying to skip all of these important elements to speed up the learning curve. They don't want to spend this extra time at night going through this, journaling, looking at the trades and all that stuff. And I showed you guys last week on one of the videos where I was able to look at the trade and determine that it wasn't the strategy that failed, it was me, the trader, that failed. It was a mistake I made in execution. And through that, those couple of days that I looked at that and I reflected on it, I was able to see that I was being impatient. I wasn't allowing the setup to work. But you don't see that in the heat of the battle. The adrenaline is flowing. You're ready to make money that day, and you don't really see it. The only time you see it is when you come back and you reflect on it, and you've kind of taken notes on what you felt, how you felt during the trade, the things that you thought about, the things that you saw. All of this is going to help you get better down the road. Okay, I know keeping a journal is hard. It's hard work, but hard work pays off. Okay, you know, I would rather put in this work than actually lose my money and just have to accept that I'm a failure at this. I and that was the hard decision I made. Yeah, I had to stay up late. I didn't get a whole lot of sleep, but it's worth it. It was 100% worth it. So what are you gonna choose? Are you gonna choose to journal and reflect on your trades, or are you gonna choose losing your money and walking away from this as a failure? What are you gonna choose? So you can look at this on the left here. You've got your strategy, your scan process, which this is how you find your stocks. You have parameters that you use to find stocks to trade. You see me go through this process every morning. The vet process. This is how you determine whether you can actually trade this stock or not. Does this stock meet your risk reward parameters? Is there enough meat on this bone for you to even take this trade or to trade this stock? So you're vetting that stock. You're looking at, that's when we look at the levels of support and resistance. We look at the daily moving averages, the daily levels. We look at all of that to see, hey, is this stock going to make my watch list? It got the scan, it made the scan, but is it going to make the watch list? That's where that vet process comes in. And then we've got the plan process where we plan our entry. We know what the entry strategy is. We know exactly what we're looking for to trigger an entry. We know where we're going to put our stop. We know how much we're going to risk per trade. We know where the technical level is that will tell us whether our trade failed or not. And we're going to have our profit targets. And we have to make sure that all of that makes sense. If we have a dollar stop and a 50-cent profit target, that might not make much sense. So we have to make sure that everything we do in the plan process lays out, and makes sense. Now, how do we know whether we made any mistakes going through our process? We reflect on it, and we describe the trade. We describe how we felt in the trade. What are some of the things? If we got in the trade and as soon as we got in, we felt nervous, or we just felt out of control, we were probably in with too much size, and we weren't really able to accept the risk. But if that happens consistently, and then we're not trading and executing right, we can identify the problem. But if you never reflect on it, you never journal it, you would never know. So we go through this whole process to where we analyze it, we come up with a action plan that we're going to put in place to help us fix these problems. So what reflection and journaling does is it helps us find the holes in our trading. It helps us identify areas for adjustment. Where can we make adjustments? Do we need to make it in our scan parameters? Do we need to make adjustments in our plan? What areas do we need to focus on in our trading? Where are we dropping the ball? Because 9 times out of 10, it's not the market. The market isn't the reason that we're losing. It's us. And if we can't figure it out and we can't right the ship, we're going down. And how hard and fast we go down is going to depend on how much we ignore a lot of this stuff. So, then I have a reflection sheet that I give everybody that they could go through, and they could jot this down while they're in the trade or right after the trade. Just kind of jot it down. How are you feeling? Some of the issues that you're dealing with at the time, you can just kind of jot it down. So really, to sum this up, one of the biggest benefits of a trading journal, and I feel the most important, is that it helps you build confidence in your trading system. Okay, you're able to execute your trades without fear or apprehension when you have confidence in your trading system or your methodology, however you look at it. Confidence is, without confidence, you're not going to execute well. So as you journal and you reflect and you see what you're doing wrong and you see how you could tweak this and tweak that, and you see that it's not really the strategy that's messing up, it's you executing the strategy wrong, then your confidence comes back. I go through it. This is what I deal with. This is what I go through. If I have 4 or 5 losers in a row and I go back and I look and I'm seeing the same issue every day in my journal, I know what to fix. I know what I need to do to right the ship. And you see me do it live every day. I don't skip 3 or 4 days trading and then come back and all of that. I do this every day. I've been doing it every day in this community for how many years? And then even before that. So it's about taking meticulous notes and recording the conditions surrounding all of your trades that you're going to see your trading improve over time. It's not a quick fix. It's not an overnight fix. It's something that is going to take time, but it's not going to take nowhere near as long as it would if you didn't do it and you just kept trading blindly. Because I'm going to tell you, it doesn't take anything to make a winning trade. No skill at all. But it does take skill and discipline and patience to make money over time and to grow and to develop into a trader that you can make a living off of, or that you could build your generational wealth. So, some important things to note are your emotions when you enter the trade, during the trade, at the exit, outside market forces. What happened that caused your trade or the market to do something that spooked you? What happened? Did something come out in the market that caused your trade to go awry? And then how did you respond to it? And after that happens to you several times and you have notes on how you dealt with it, it's like second nature. It doesn't bother you at all. Um, why did you decide to exit early if you did, or exit late if you did? You have to hold yourself accountable. So after that, you can then establish good, profitable habits and throw away the ones that are causing you to go downhill. Okay, so I'm really really adamant about keeping a journal and reflecting. It's something I brought over from the academic world. It works. I had my students do it, and their level of achievement went through the roof once I got them doing it and they learned how to do it. Reflection and journaling is what got me through the hard years when I first started teaching. That was a very difficult thing to do. Very difficult. But journaling and reflecting and seeing the thing, analyzing what I did right in the class, what I did wrong, how I did the labs, what I did right, what I did wrong, what do I need to give the students next time so that the labs and the experiments would be more effective. All of this got better because of journaling. My trading got better because of journaling. When I brought all this over, it just got better. So that's my rant on that. We'll take a look at the one trade we did today on BA. Now, I didn't get the big move. I didn't get the meat of the move today. Unfortunately, it just did not work out for me today. The timing was off. By the time I got back after doing my mentor sessions and all that, I missed the entry and I just never got back in. I mean, I could have gotten back in here, but I didn't. And I could have gotten it and taken it all the way up. I was looking for 150 today and it hit it right after the market closed. And I was thinking, yeah, this thing might hit 150. I just didn't pull the trigger. And what I let get into my head was, look at how far this thing is up. It's probably not going to go up much farther. Cardinal sin. We can't do that. When the setup happens, we take it. It either works or it doesn't. We're traders, and there's no rule that says a stock can't go up any more than it's gone, or it can't go down any more than it's gone. I've missed way too many big trades because I thought in my infinite wisdom that it wasn't going to go anywhere anymore. But missed this big move, but a lot of my students, a lot of my mentees caught this move, caught both of the moves, um, and I feel so much better when they hit it versus me. I know I can do it. I can do it any day, anytime. I've got multiple accounts that I got trades going in and everything, so I know I can do it. But when you guys do it, uh-oh, cat's fighting. Got my dogs going. But I know when you guys do it, I know I've done something. And that's what really, really made my day today. All right, so let's look at the trades I did take. Didn't take the opening range because you can see it was not clean. Here's the opening range low. Right under that was a 50, and right there was a 100. Not a clean move. So no setup. You do not trade an opening range trade into support. I waited, it bounced, and this is a trend continuation. What's the overall trend? It's going up. We're making higher lows. I don't even need to draw a trend line to show me that. So once we got back over this, trend continuation all the way. I didn't need to wait for the 5-minute opening range high. Didn't need to wait for that. I got in here. I took profit a little bit early here. Um, I kind of had this thing figured out a little wrong, but I got profit here. This should have been my first profit target, the opening range high. But I kind of got confused when I was planning this and had the wrong numbers written down. But we got profit there, took it at the opening range, and it didn't quite get to my second target or my final target. It didn't quite get there. This line here is I drew this after this move because this was the higher day. So we pulled back. I went to get the bounce here, and it turned around and stopped me, immediately stopped me out. So we pulled back again, and I waited and waited and waited. Got it again as soon as it looked like we were ready to break. Stopped me out again. And then I got back in. I knew this trend was holding. Um, I just had to wait until we got it. And so I got it, got to move up. It put in another, this was the second high a day it pulled back from. And I was in the mentor session through here when I got stopped out. And this was the entry. Once it bounced, we closed above the 20 and the 9. There was the entry right there. And a lot of guys got it. They got this move, ran it right up to this daily level here, 140.68. Made it all the way up. And this is the move I did not take that I should have taken. I slapped myself for not taking this. But went right up to around 147. We got a pullback. It wouldn't have taken me out because it never went back to break even. And it just pushed up. Now, it wasn't the cleanest of price action here, but still a really, really decent trade. But again, I say I'm glad you guys got it. I'm glad to see a lot of people really catching on to this and being patient and allowing this trade to where you could see you can make a ton of money. You could trade this with 100 shares. Look at the move this stock made today. I mean, it went from like 130 all the way up to 154. And we could have gotten the meat of that move. Really easy. See, I got in at 132. The market closed at what, around 148. Doesn't take a whole lot of size to get that. All right, so that's gonna do it for today. I hope you guys um, got something out of this. We'll be back at it tomorrow. See if we can add some more money to the pot and keep this week going. Remember, this is a short week. The markets are closed Friday for a Good Friday. So we've got 4 days to make it this week. So let's make these 4 days good. So you guys take it easy and have a good rest of the day.